Tonight's Market Monitor is a value investor who likes large cap stocks with high dividend yields, low price to earnings ratio, and very little debt. He is Randall Eley. He's president of the Edgar Lomax Company. Welcome. It's a pleasure to have you here, Randall.
And it's a pleasure to be here. Thank you.
That sounds like a pretty good recipe. You know, little debt, good price to earnings ratio, good dividend. What sectors of the market do you find some of these stocks in? Well,
we're finding that the long-time theme of the last shall be first, or at least will probably be first. We're finding that energy and telecommunications, which were the worst performing sectors of the S&P 500 last year, are probably the place we're finding the most undervalued stocks right now.
Interesting.
This feels a little bit like the dogs of the Dow theory there, Randall. Let's start with one of your picks, AT&T, with a very plump yield of 5.6%. Boy, just to own that stock and get 5.6%, you can almost count me in on that. Why do you like it?
That's right. It's 3 times the 10-year yield, or the 10-year treasury. But this is a company, it's the biggest telecom company in the U.S., and most people forget it because it's not in a glamorous sounding business.
And you have a price target of about 57 on that stock, correct?
Oh, that's right. Almost a double.
Wow. All right, let's move on to ExxonMobil, and that plays to the energy play that you mentioned to us a little bit earlier. What's your price target on this? And, you know, it looks like it's ripe for the picking because it's been so beaten down.
That's right. Here, we're looking for more than a double. I mean, this stock, we would not consider it overvalued unless it was almost $190. The product they sell, we all have to use. There's no choice about it. Also, as the price of oil falls, and most observers seem to believe that it will continue falling, the seeds of eventual rise are being planted because you have the market increasing and supplies falling.
Randall, your third choice is another company. I'm happy to say I know all 3 of the companies you're picking tonight. And if either of the first 2 companies hurt me, I can turn to the third one for Band-Aids, Johnson & Johnson.
You probably wonder how we make money with these stage-sounding names.
Tell me about Johnson & Johnson and why you like it. You got 120 as the price target on it.
That's right. Similar to Exxon, we all have to use their product, but here you have a growing market, and that's aging Americans. That despite all of our problems, and you notice I'm including myself there, still it's a relatively well-funded market segment. So I think you have safer earnings, and as a result, we don't have to look for as greater returns since we think the returns will be more solid even in a recession.
All right, you named 3 names that have some pretty good price targets on them, but what about the overall market? What kind of a year are we going to have in stocks?
Well, I think I certainly don't expect a bear market anytime soon, but I think the market is at least fairly valued, you know, in the long term. And I'm not looking for the kind of sharp rises we've had over the last 3 or so years. You look at 2013, for example, with the S&P 500 up 30%. I would not expect to see that regularly in the next 2 or 3 years.
You know, your fund was up about 15% last year. That was better than the S&P 500, and there were not many managers that were able to do that. What worked well for you last year, Randall?
It was primarily companies like the healthcare companies. It was the Johnson & Johnsons, the Mercks. We also had a substantial position in IT and for technology, with Intel being a big holding of ours. So that stock that 2 or 3 years ago people thought couldn't bang his way out of a wet paper bag, it really came through with a rise of over 40%.
Randall, thanks so much for spending time with us. We appreciate it. Have a great weekend.
Thank you for having me.
Randall Eley with the Edgar Lomax Company.